Hello YouTube and welcome back to YFP, your final piece in your trading journey. So following on from our last video where we covered our daily highs on our daily low reversal model, in today's video we're going to be covering the internal range liquidity, and I'm going to be demonstrating a few examples of this. Now for the purpose of this video, I've color coded the charts. As you can see, I have green horizontal lines which are demonstrating our daily highs and our daily lows, and our red horizontal lines which are going to be demonstrating our internal range liquidity sweeps, which I'm going to be showing you guys today. Now as traders, we're faced with a lot of trials and tribulations, right? So when it comes to actually trading the markets, one of the common and frequently seen drawbacks are traders that claim that their SL, their stop loss, is being hunted and then price is going in the direction which they anticipate. Now they may also be in a mix-up about what point of interest to actually choose when looking for a continuation or reversal setup, and that's coupled with actually not understanding structure correctly, as when inducements happen, it's purely based to trick the masses into thinking one way and do the complete opposite. Okay, so if these obstacles are what you're currently facing, then you're in the right place. So let's get straight into the video. Now firstly, I'm going to basically show you how to identify these valid point of interests, and they're all going to have some similarities between them, which will sort of allow you to pinpoint the POI that will succeed in providing you the opportunity to obviously extract profits from the markets. So let's start with showing you this diagram that I have done, and it will sort of depict what we'll be looking for today in all of our trades that I'm going to be showing you. Now when we're looking for our internal range liquidity, it's important to note that we're looking for an area within this range that has been created where price has got a low that doesn't have a sufficient imbalance. However, on the lower time frames, if a smart money trader was to refine within that, there will be an imbalance that they're going to find, of course, right? Now, what we want to sort of identify is this area as an area for our reversal. If when we start the day, let's just say this is our daily range, this could even be Asia high, for example, and then during the London session, we have this sort of sweep of the internal range liquidity into a demand pool. That would be a valid entry for me to take, because we have taken liquidity out from the left into a valid area of demand where there is a PO, where there is an imbalance through it that has broken internal structure to the left as well. Now the same thing that we'll be looking for the sell side delivery. So this is our yesterday's range that I'm showing you here. Apologize for that. This is our yesterday's range, and essentially within this range, we want to find our internal range liquidity, which is going to look like a high with no imbalance in it. And essentially what we want to see when price even approaches both of these is they sort of attract the early buyers or early sellers into the market before purging them out into a valid supply or demand zone, and then giving us our trade entry. Okay, so let me show you a few examples of this on the chart now, so you're able to understand the sort of narrative behind these trades and what they sort of look like, so you're familiar with how this setup will look. So breaking down this first one then, as you can see, we have our low in between our range. So this is our range that we're playing inside of. It also broke internal structure, so this is our range of focus that we're focused on. Now we have this low that has been taken out, and you can see price gives a very nice reaction back up to the higher prices. So to identify the POI below this is simply this sell to buy here. So you can see this down candle before the up move. It also has an imbalance through it, and it also took out internal structure to the left. So that POI would be valid. And not only that, if we're combining our understanding of our daily highs and our daily lows, this was actually our daily high, our daily low reversal model, which has induced the low, delivered a new high. So that POI just holds even more weight. Now that's where our focus will be upon. Now in future videos, I'm going to show you how we can identify early buys even within this low. Okay, so in each one of these areas, we want to see a build up even before and within the POI. Okay, now to confirm the build up, I'm going to be showing you in future videos how we can utilize divergence to actually signify that there's been a sweep in the market that will give us a little bit more confidence to enter that position aggressively. Because if you want to be entering from these wicks without that lower time frame confirmation, you need a sort of indication that price has sufficiently swept an area before reverting in the opposite direction, and we'll touch upon that in future videos. Now let's move on to a second example of this. So this is an example that I touched upon in the last video as well. We'll cover it in this video as well for these purposes. So on the H1, we can't really spot the imbalance in this POI yet. Obviously, we have this buy to sell and there's imbalance here, right? However, we can't see the true origin of where that imbalance was created for. So for the purposes of that, we'll be dropping down to the M15 time frame to identify this now. So we want to be taking that whole buy to sell, right? That whole buy to sell that also takes internal structure out. So we have internal structure that has been taken out here, and we're essentially looking for sells prior from this based on our narrative. So if you watched my last video, we've obviously tapped into a supply region, which is an imbalance within a premium array of the whole range. And essentially we should be looking for sales now because we have purged our external. So we purged our previous daily high. We've obviously taken out our same day external, which will be also explained in a future video, but explaining this now. So our narrative is built prior to all of that information that I've explained now. So when we take out this internal range liquidity, we purge it inside of that OB that's created, and you can see price straight away delivers lower prices. Okay, so as you can see, they all have similarities between them, right? So when we're looking at this one, for example, it has the POI to the downside, which we're looking for our entries. Even this one, so we have our internal range liquidity. On top of it, we have our supply zone. Now, for this one here, you can see again, right? This low here has got an imbalance. However, we need to incorporate our use of our premium and discount arrays. Now, if we're mapping out this whole range of price here, this doesn't even come into an equilibrium of a price range. Yes, it does have an imbalance, right? Hence why we're getting reactions to the right, right? We're getting reactions from smart money that are entering the market, and you can see they get aggressively purged out of the market, triggering X amount of sell stops from this low. So there's sellers are also entering from this breakout. Buyers are also getting taken out from this low, and price is seeking a true point of demand in this case to tap into. As you can see, this OB also has an imbalance straight after it was created. So it had that gap in the market straight after the price created that sell to buy, which indicates that an institutional push has happened from there. Not only that, we've also broken internal structure. Now, you can see price taps into it and gives you a very aggressive buy back up to the same day external liquidity point. I've already covered this, so we'll move on to the one here now. So guys, as you can see again, we have a high. It hasn't got any imbalance that has been left. It has been filled in instantly and then just left and reversed, right? Now, the next day comes and we can see that price has tapped into this zone, right? And it has also on the 5 minute. So let me just go back to this on the 5 minute. I've also created this buy to sell that will give us the opportunity to enter the market and provide us with the opportunity to extract profits successfully based from a very mechanical way of entering. So we're always waiting for a sweep of liquidity inside of a demand or a supply area where price will then continue to go lower. Again, guys, let's go and work this out now. So again, we're in this range of price. Okay, now on the hourly time frame, you can clearly see that even this low has got an imbalance through it, right? So from this low, from this high to this low, there's an imbalance. Price has created a sell to buy. We've also taken out structure. This low here, when we go lower, it doesn't have really an imbalance push. You can probably say that this is an imbalance push, but as I said, guys, you need to have the sort of you need to have the understanding that price is going to hunt into the most relevant piece of demand or supply that has liquidity above or below it, right? Now again, this one is at an equilibrium of price, but you can see that before price is before we want to enter price, we always want to see these vector candles come in. So we always want to see these manipulation candles that take out a form of liquidity. So in this case, again, let's just imagine there's X amount of buy stop losses that are underneath this from early buys that are buying against here, even here, right? This Asia low. There's stop losses or buys underneath this. Not only that, as price breaks down into this liquidity, there's also sell stops that are being triggered here. So breakout traders, which are being attracted to sell the market, are also being entered into this area, which allows the market to actually reverse in the opposite direction due to all of these factors combining. Okay, now moving on, so to the final example, we have this that happened literally on Friday. So on Friday session, we saw that price has hunted into a internal range liquidity point, and price is seeking a area of demand which it can tap into. Now for this, it was a little bit tricky for me. I'm not gonna lie to you, Friday wasn't the best PA, as you can see the range, and it's gonna happen. Like guys, you're still gonna take losses in a strategy that even is mechanical. It's just part of the game and probabilities. Your job as a trader is to identify these setups that are similar in the way that they deliver price, so that the next time that you see this happening, your subconscious will recognize it and you'll go through the process of your confirmation. So how do you enter the trade, how you're going to exit the trade? You'll build up all your confluences and your narratives to form so that you're able to participate in the markets without being caught as an early buyer or seller. Now, as I said, in future videos, I'm going to be showing you how divergence can obviously aid us in identifying sufficient sweeps, and it will sort of help us take those aggressive entries in the market. Now, the demand zone that I had actually marked out for this was essentially this imbalance that we can see here on the M5, but price didn't hit into it here. So when I seen price didn't actually sweep into it, I was hesitant to get into the trade. However, price started building up. So price started building up all of this prior liquidity, and it sort of swept internal inducement into a POI. So from that, I was inclined to actually take a buy from there, which was my mistake. I should have waited for the actual origin of the POI, the point of interest, to actually get mitigated before entering the trade. However, I FOMO'd into it, which is a mistake that a lot of us will make. Guys, don't beat yourself up about it. You just have to recognize these things happening in real time, so that the next time it happens, you can journal it and look back on it and think, okay, cool, I was early on that trade last time. Let's just take our time and be a little bit more patient. And honestly, guys, when you're trading in a range like this, it's honestly, it's not a nice experience. You're going to be literally in a range for 7 hours until price actually hits into your point of interest before obviously going higher. So losses do happen, guys. It can happen for multiple reasons, but I'm going to drop you a few tips now to minimize those losses. So based on my data and my back testing, so I have noticed that the sweeps for these areas will usually be in a range within 5 to 20 pips. So you would want to wait for obviously that sweep, that sufficient sweep of the internal range liquidity, and then monitor the supply and demand zone and actually wait for order flow to start building up in your direction on lower time frame, which we're going to go into in depth in our next videos and have confirmations of divergence. And yeah, essentially you just want to be looking for these areas as they're going to aid you from stop being a early buyer or early seller in the market. So if you're one of those traders that are constantly getting stopped out before the real moves occur, trust me guys, try and implement this and test this in your own strategies, in your own interpretations of the market, and sort of try and fit it in where it deems necessary, you know, because you want to be avoiding as many losses as possible in this game. And the only way that you can truly do that is by having a mechanical approach to the market where you're looking for certain elements to be the same in all of your trades in terms of narrative, and you want to be entering in similar approaches as well. Now, touching upon trade management quickly. So from my backtesting and over 50 to 100 trades collected from daily highs, daily lows, and this previous daily internal range liquidity models that I'm showing you today, your risk management and trade management, for every one of my trades, I'm risking a 1% for a 2.5R return or 3R. Okay. So anywhere from a 1.25R to 3R is the sweet spot for this strategy, for this it's sort of a scalping model, you know. So you just want to be in the sweet spots for it, because in my personal data collection, I've noticed that if I'm TPing at a 1 to 3, it's perfect. Like on a series of trade out of 20, even if let's just say 6, 7 of them are losers and the rest of them are winners, you're going to be significantly up, and your XT curve is going to look insanely healthy, right? It's going to have those pivots that aren't too big when you're losing. However, when you're winning, they're going to be significantly bigger than your losses. Okay. Now, another tip that I want to give you guys is that all of these areas that I've showed you, when we're looking even on a H1, we can see and identify them as H1 wicks. So H1 wick high, H1 wick high, lows, sorry, H1 wick lows, H1 wick lows, H1 wick lows, H1 wick highs. So you can see that on the H1, they will look like either an FU candle or a OB that is very low probability, that doesn't really have an imbalance going through it, and it's just there purely to trap in early sellers or early buyers so we can use their stop losses as fuel, and also fake out X amount of breakout traders to also enter at that same point that stop losses are getting taken out before giving us a move, a volatile move. So all of these moves that you're going to take based on liquidity are going to be super fast, guys. Like, you're literally going to be in the trade for 15, 20 minutes, half an hour, and you're going to be TPing at 3R. So if you have a 200k account and you're risking 1%, that's literally a six grand return on every single trade, which in the long run, it really adds up, guys. You literally need 2 or 3 of those trades within a month and you're good to go. Take your profits from your funded account and enjoy your freedom, guys. That's what trading is about. Okay, so in today's sort of video, we went over the reason why this works and how the manipulations of a high, for example, triggers buy stops and SLs of sellers, and then going in the intended direction of early sellers, right? By understanding these concepts, you'll sort of be inclined to look for liquidity sweeps into a POI, and it will provide you with high probability setups as you have waited for manipulations to happen before the real distribution will occur. So guys, if you have liked this video, please don't forget to drop a like and a comment, and also just comment what you have learned. Now, I'll be obviously following on from this video and going on to the same day external setups, and then followed by a video that combines all of these concepts together, truly giving you an insight into how liquidity really can change your perspective on the markets. So as usual, guys, please drop a like, comment, and hit that subscribe button. Also click that little notification bell so you never miss an upload from me, as there's going to be consistent knowledge and source that is going to be dropped, you guys. So I'll catch you in the next video, guys. Peace.